Welcome to TradeTheNBA.com. This is John. This report is for the 21st of December, the shortest day of the year, the winter solstice. And in this particular case, Scrooge looks like he's got the upper hand on things, but don't get overdone about it. I mean, the reality is that 2505 really was a pivot point, and they're still trying to push back to it. We ended up with the downdraft, given that we've had a significant short reading for quite some time here. We've just been in continuation with this as long as that orange stays between the cyan and red DOC. And with this, in fact, even if orange continues to dip, you're not going to have one of those scenarios where you get a significant turnaround unless you get a major dive in the orange. That would require a really significant move up. We're still below the red line, which means the lows are going to be revisited. So any pop is still going to come back down to this 2441. So while they're looking for that technical get back there, because there really isn't a whole lot from this 25 down to 23, 50-ish range, I'd have to go all the way back to show it. So it becomes problematic because anywhere that there's so-called support or buying becomes a little bit less definitive from at least a technical standpoint. We're going to see it from an algo standpoint where it'll be attractive to them, but in general, this just shows I think some people have called the Fed tone deaf, blah, 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 but they really don't care. They're just more interested in normalizing their balance sheet and making sure their numbers are correct. And of course, they're looking at the history rather than projecting into the future. And it's the same pitfalls that they fall in. They really don't care if they slow the economy because that's actually what their intent is, which some people say, oh, that's can't be so. Well, they really don't care otherwise, because there really isn't justification. Just because there's low unemployment isn't a justification for raising rates, but we already talked about all that. So all we can deal with is what we have, and what we have are continuing declines in the shakeout. However, there's some improvements. The fact that we moved back up from there, not horrible. The separation is not great, but we're reaching levels that were you might consider super extreme, where we tend to get bounces. So you can see that even from the past time. Now that doesn't mean we can't continue, and even if we do get a bounce, it's not likely to be sustainable. But of course, the 23% Fibonacci lines we have here tend to be a draw. This rise in the euro certainly helps support the market. It's been a significant push, and that really does give buoyancy, particularly when a lot of earnings are derived from European. Not that Europe is doing anything special. Continuation of the ridiculous move to bonds, given the rate rise. There's just no way this should be up there, which just indicates the level of fear. And a continued plummet in oil, again, signals two things, both the excess of supply and the potential decrease in demand. And you can see how it corresponds very nicely from our short signal here. If we go back to the daily, and right over here, October, our sell signal. Isn't that interesting how those two just, work together? In fact, the oil signal came just a little bit after the market signal. Go figure. And gold, it was interesting pop back up for gold because, again, just, where are you going to go? There's just not a whole lot of places to put your money unless you're going to be short, which not everybody can be, so that really changes things. This shows part of the dramatic nature of the day. If I scroll back just a fraction, you can see we started the date line right there. And once we get past that, we get the nice increase. And so, boom, started off with the short. From my standpoint, that 23% becomes the key. Once I'm above it, that's usually my cover spot, particularly because you're normally going to get this kind of signaling going through there. However, with the white candle, you have an expectation to usually make it right back around to the close of that, which is interesting. It happened all the way over here after the next sell signal that took place. What was that one? That one's 2513 range, because it happened right there. But even if you wait for the break of the ABM, it becomes a beautiful one, because break of the ABM gold, it's like boom, you can even set break even and then just wait it out until you get significant buy signals. And in this particular case, it jumped back and forth, and again, it closed over the 23 with the dip below. All decent readings as moving into the positive shakeout. That created the pump, which created the same. Now this is an interesting one. It started right here with the crossovers, only you didn't quite have as much bonus down. The second one with the red falling, I like it. Further like it when it does it much stronger. The next bar over, still doing the same thing. So the point being is that there was just a series, and then boom, full DOC spread happens right here at the 2507. Pick your poison. The market is generous in a lot of these, but at a certain point, if you're not there, it's just going to pass you by. And so, while the first one may seem a little tougher when you have rising red like that, by the time you move to the next one with the lower red, you have to be far more confident in that setup. Of course, everyone worries that this orange is going to decline and rising steel is going to do it, but that's where you're looking for the momentum play to make sure that red crosses, green crosses below red, and you see the rising of the cyan to just give the confirmation. Of course, at 50% there, did the exact same thing again, only faster. Second time around, second high, lower shakeout reading. Any doubt about that? It's just a matter of getting the high. And if that looks like it's sloping downhill, which it is, you have a pretty clear idea that you've got a higher matching highs with lower shakeout. And when that DOC spread came, it's nothing to do. It popped back up a little bit, came close to it, but again, even from that ABM yellow, likewise, we repeat the same story over and over again. And that led to really a precipitous drop that took us all the way down, some 30 points, before we got singular close above the 23%. But even still, with that move, it ended pretty fast. Right there, you ended up with the split right back at that 23%, and just kind of hovered flat for a while until we made a little bit of improvement with the shakeouts. Gold reached the lows and bounced a little bit again from the high. Relatively speaking, again, this is the same configuration. The orange crosses the steel, steel crosses below cyan. Cyan, green, red, all of them there, but green is below red, and if you wanted to wait, fine. It's just going to cost you a few points, nothing dramatic. In this case, we had a close at 82.75. By the time the DOC, you're at 79, 3 points, but a much clearer, distinct reading. You just had to worry about the closing of the short with the steel. And by the time it crosses there at 50%, you got to be thinking, okay, I may have to be a bit more defensive. And in fact, then by the time you get the actual buy signal, it converts to a new short relatively quickly. The cleanest one came right over here from a momentum standpoint, and that led to another massive decline, which, if we keep scrolling, was a long day. Then we ended up with successive rolling high lows, and then boom, right at the 23% from the gold having already reached the zero, and that was just a straight up move which produced a beautiful similar spread, same concept. Again, you had it starting right there, the rejection. This one a little bit different because it didn't quite have the steel coming from above, but they met and then rejected, which is equivalent to the crossover when you have the cyan under red, but you had the green cross below, you already had red moving lower, and orange spiking up, and then sure enough, that was it was a beautiful run. Even if you take it from where it was signaled, and you just, once you're below the 50%, you have to protect the 50%. So even if it's 16 points, fine, you don't want to take as much, 14 or so, it's still significant return. Late in the day, similar concept, just repeating itself over and over. We had the rejection of green with cyan. You had the orange coming up. Steel goes below it. Whether you waited to this bar, you want to wait to the open of that one because it really signaled even stronger at that spot. You wait till 50%, whatever. You got to be in these because even from there, You want to take it to the 23%. It's still 12 points. If you decided down here at the white candle with the buy signal, you get the full 16 out of it, and then the market turns around and hits back up towards that, because they really need to get towards that 25.05, because if they don't, the hemorrhage gets a lot more severe. And so that's really what the fear now is, but also that shorts will overplay their hand too quickly. Again, a lot of people are doing calculations on what this means forward growth-wise, and this is really where we're talking about valuation. If you assume that the economy is going to move to a recession, then your EPS and stuff changes dramatically. If you think that this just slows the economy, instead of having 4% growth year after year, where you would be at 3,000, 3,400, 3,500 for the S&P, for the ES at least, then all of a sudden you've recalculated down to 2% growth, maybe 24 to 2,700 is a more reasonable range. So this would not be that far out of line. So it really, this becomes the different camps on whose economic models think that we've moved to a recession versus those that think that things have just slowed because the Fed is trying to squeeze the economy. And of course, it really puts them at odds with what Trump and some of the others were really pushing for, because it just didn't seem like there was justification in that. They're really not caring about what happens in real estate. Things like that is very interesting, because it really has a strong propellant effect for confidence, blah, 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 blah. So maybe they were concerned about, well, they really don't care what stock values are, because it's irrelevant to them in that broader sense. They're really worried about their monetary policy and what they want to do to their balance sheet, and you bear the effects of it now. That being said, we can certainly take advantage of things, and being able to trade this effectively is the best antidote. So that gives us complete flexibility, both sides, long and short, and got to take advantage of that. So more beautiful stuff. If any more interesting items pop in, I will certainly put them on the Skype chat. Everyone have a great solstice, and we will talk again at the beginning of the week, right before the short Christmas holiday. Trade well.